We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by John-Paul Conoscente, who's the CEO, Scor PNC. John-Paul, good to see you again.
Yeah, good to see you.
So, John-Paul, Monte Carlo, a big date in the diary for Scor. This year, with a new chief executive and a new chairman, you've unveiled a new strategy. Can you give us some highlights?
Yes, the strategy is actually very simple. Two main points. One, the company balance sheet is strong, the franchise is strong. Therefore, the strategy is just make the most of favorable market conditions for reinsurers, keeping the balance between P&C and life, and within P&C, the balance between reinsurance and specialty insurance. And the second objective is really future-proof the company by investing in a few levers, including data and tech, stronger capital management, and ALM.
So you talk about favourable conditions for reinsurers. Not all lines of business are at the same stage of the cycle. Can you tell us a little bit about where the opportunities lie?
Yeah, so you're correct in that all lines of business are at the same stage, but we find many lines of business are at a decent price adequacy level. So they won't all be seeing the same price increases, but in terms of expected margin versus volatility, most lines of business we find are attractive. What we want to do is really grow our overall portfolio. So we have very strong appetite for some of the specialty lines like engineering, marine, international casualty, and IDI, which is like this and now, something Scor is very strong in. Where we have more limited appetite, but still want to grow is cat, cyber, and credit and surety. Some of the lines we have a more prudent stance on is U.S. casualty, where we view that the tort volatility as being too much compared to the expected margin we get.
So hard markets, we're in a hard market, it seems to be the general consensus. Hard markets typically last less time than soft markets. How long do we think this one's got to run?
I think this one has legs because we still have a deficit of supply-demand on the cat side, and I think the overall performance is still fragile. If we have a very big cat event happening between now and the end of the year, all bets are off. If we have a big one early next year, again, all bets are off. So I'd say if the industry makes profit over the next 2-3 years, then I think we'll see maybe a change. But I think for the next 2 or 3 years, we expect the hard market to persist.
So an important participant in the whole reinsurance world is the investment community. What's the investment appetite for reinsurance risk at the moment?
I think it remains prudent. You don't see a lot of new companies coming in. We see capital coming in, but behind incumbent. And so I think investors have been sort of burnt over the last 4 or 5 years by reinsurance, and they want to have more than 2 quarters of good results before they come in big time back in the industry.
So we're coming to the end of the Monte Carlo Rendezvous now. The discussions are drawing to a close, the conclusions are being drawn, and people are starting to look forward now to the renewals at the beginning of January. Clearly, as you said, a lot can change between now and then. Last year, there's a sense that it was a little bit disorderly. What do we think about the forthcoming renewals?
I think it's more orderly. The expectations of reinsurance companies are much more aligned than last year. I think there still will be some, not contentious, but some, further discussions on a few topics. I think many insurance companies on the cat hope that all the hard work has been done in, last year, and they could just focus on price this year. I think you don't undo 15 years of soft market features in one renewal. So we still want to have further discussions on some of the treaty wordings, some of the event clause definitions, some features like how do we cover SRCC civil unrest, how do we treat non-property BI. So still a few more discussions to be had. U.S. casualty, I think, will be much more discussions, not just about pricing, but about sustainability of what's being proposed to reinsurers. So I think overall orderly. We expect time-wise also to be back to normal, but probably still some contentious points to resolve.
John-Paul, thank you very much indeed for joining us.
Thank you.
For AM Best TV, I'm Richard Banks.